37 days, 99%. Guys, in this video, we're going to be jumping into Luna. We're going to take a look at a few things. Technical analysis really isn't something that's viable here, but I am going to go through my thoughts and processes here when it comes to Luna. Guys, as I get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Obviously, guys, we are not afraid to put content out during times of extreme volatility like this. We are here to support you. So if you haven't yet joined us in Discord, links in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not check it out? If you're looking for more from the crypto space, everything from strategies in the bear market through to project reviews and trading, check out the Patreon services as well. But let's get into this, right? So obviously this is just Luna on the daily chart. Now I've obviously hidden all the analysis that was working previously. And basically we hit an all-time high, $120, I think it was $119. And actually it's a little bit, yeah, let me just bring this back up here for a sec, because we can see that I haven't quite got this right on the nose there. Let me just go ahead and put that right there. There we go. So basically, you know, a lot of people were giving you some warnings ahead of time. I think, you know, some people maybe putting content out, you know, around the kind of like the 14th of March or around that kind of range down in this fourth wave low, telling you to kind of get out. And, you know, in hindsight, that looks really good right now, but also they were missing the all-time high. But just bear in mind that there were a lot of flags kind of indicating to this quite early on, right? And if you got wind of that, you could have potentially pulled out a little bit earlier. But obviously, you are potentially where you are right now. You might be in Luna, you might have sold, you might have just hodled this entire thing down and seen 99% of loss, 99% loss on your your investment in Luna, and that's really, really unfortunate. And you know, my sympathies are with you on that scenario. However, if you were able to get out, congrats, you obviously were able to protect your assets or your portfolio on the way down here. Now, I was not in Luna at these points. I had been doing trading on Luna, but I had not actually bought any Luna into the hodl bag at this particular stage. I know Chris had bought some on this way down, and I actually managed to get some yesterday at a pretty good rate. But there is high risk, in my opinion, okay? So there is a true possible scenario here where Luna does actually go to zero, okay? We should be open to the idea here that this is, you know, this is not going to end well. And therefore, if we were to jump into something like Luna, we should be considering you know, that anything you invest there, it could just completely lose it, you completely disappear, right? And this is something that, you know, a lot of people are familiar with the saying, right? Only invest what you're willing to lose. It's crypto's high risk, it's volatile, blah blah blah, all the usual kind of stuff, right? And for Terra Luna here, this is exactly that. However, I do look at this slightly differently. It's all about risk reward. Right now, I can put minimal risk up for absolutely massive rewards if the protocol is able to resolve its issues and is able to kind of move forward. Okay, so I'm crashing down 99%. There is only really, if they are to survive, one way that this is going to go, and that's going to be up in a significant way. But they've got a lot of work ahead of them. So there's high risks, but those high risks could have great rewards. Okay, so just keep that in mind as we start to think about where Luna could potentially be going next. Right now, at the point of recording this video, it's 15.8 cents. I thought yesterday it was a pretty good deal when I scooped it up at 85 cents. So right now, I'm looking at this and I'm thinking, do I want to put more exposure into it or not? Because I said high risk, high rewards. So that's something I'm going to be looking at today as to whether or not, you know, I'm going to look to throw any more into this, or whether or not I'm just going to be happy with the risk I've got exposure to at the moment. So just keep this in the back of your head, guys, because essentially, you know, it is going to be one of those things where it could fail or it can turn things around, okay? And it's going to be hard to turn it around. It's easier to fail at this point, and so just keep that in mind. Obviously, I'm not a financial advisor. I can't give you financial advice, but the risks and the rewards here, I feel that the rewards are greater than the risks if we have proper risk management strategies and all that kind of good stuff. So that's kind of where it is right now, 99.87, and it's probably going to drop down even lower than this. So, you know, I can't do technical analysis because this just is not natural. Okay, this is just manipulation of what's been going on with the ecosystem and the advantages that some people have been able to take with it. So just keep that in mind. Now, the other thing I wanted to kind of talk about though was more this one actually. So basically, it's obviously the DeFi protocols that are associated with the stablecoin, which obviously makes perfect sense, right? They are going to struggle, and these are also at 80% declines. Now, for these DeFi protocols, the same issue that you have with Luna exists here as well. And they're basically, what I'm trying to say here, I guess, is that if Terra Luna goes down and ceases to exist and goes to zero, then these DeFi protocols that are running on this ecosystem might not necessarily go 100% to zero, but they're going to have to rebuild on maybe some other kind of ecosystem, right? And is that even something that is viable to them? Maybe that some of them will actually have to go to zero, right? So just keep these things in mind. Think about what is being built on there, what is using the stable coin, all those kind of things, right? Really important. So obviously it's a knock-on effect, right, of the collapse of Luna is how they kind of say this, right? But these are things like Anchor Protocol. We've got Astro ports. We've got Mars Protocol, for example. And these are things that you should really understand that, if you're invested in them, you've seen significant reductions already. How low they are going to go probably will be very similar to Luna. Obviously, the entire crypto space is bleeding out heavily. We've had that kind of level of significance in the altcoin market, right? Many of those altcoins now are at their optimal dollar cost averaging locations, right? If I'm doing technical analysis on an altcoin, they're pretty much all doing very, very similar things, right? They're all right down there, 85, 90% from all-time high. And that's exactly where you want to do all of your dollar cost averaging, in my opinion, because that is essentially where you're going to see maximum gains in the future, right? You're going to see new all-time highs, and you're going to be in so much profit. It's going to be absolutely ridiculous. This is what Chris and I did way back in 2020 after the pandemic crash. We were buying prices when they were all the way down there, when fear is at its maximum, when there's maximum amount of blood in the streets is when you are buying. And when you're seeing discounts at 90% of their previous all-time high, as a retail investor, the best strategy that I found is to basically just dollar cost average slowly, okay, as that price maybe pulls down from 90 to 95%, let's say, or from 85 to 90%, just dollar cost averaging, okay, slowly laddering our way into the market, building a number of coins or tokens rather than looking at the dollar amount. Expect the dollar amounts to go down during this particular phase, but essentially just dollar cost averaging over a period of time within that, that range, anywhere below than 80% in my mind is a really good place for dollar cost averaging for the average retail investor. If you're throwing bigger money in, then you're really looking for a different strategy. Dollar cost averaging really isn't necessarily going to be the one that you're going to want to do. So if you're throwing in $10,000 into the market, dollar cost averaging is going to be fine. If you're throwing $100,000, you could probably do a mixture of a couple of different things. But if you're doing any more than $100,000, you're probably going to want a different strategy than dollar cost averaging, in my opinion. And so just keep these things in mind. So just with to go back to Terra Luna. These protocols obviously are in that sweet spot as well, but obviously if you are looking at dollar cost averaging into Anchor, Astro or Mars, we should be really considering whether or not they're going to survive in the same way that Luna would survive. So I think it's important that we understand risk and we understand the rewards, high rewards, high risk, and all of that kind of thing. Right now is more of a time to be dollar cost averaging into projects and protocols that have longevity. Okay, it doesn't mean that you can just throw money at anything. There are going to be many projects, right? And we talk about this all the time in the live AMAs with the Patreon members. When we were doing live streams on YouTube, which we might go back to occasionally, we talk about one very simple thing. When we started this channel, there were only 3,000 altcoins or 3,000 cryptocurrencies. We're now approaching 20,000, right? Not all of those are going to survive a bear market. They only popped up and cropped up during the bullish times. They will not survive the bearish times, and therefore throwing money at just anything randomly does not make for a good strategy. Essentially what you're going to find is that you're going to push you're basically going to lose a lot of money as these protocols fail. They do not have the cash reserves to be able to survive a long sustained downward market. So just bear in mind that you'll really want to spend this time now doing solid research, the stuff that Chris does with the Patreon members in Discord. Essentially that research is absolutely vital in understanding what projects have got a fantastic team, have got great cash reserves to survive bearish times like this, and have a serious good use case that people are going to want to use when the next upward market starts. Okay, so these are the things that you really want to be focusing in on in my opinion. Okay, for when you have Anchor, you have Astra, you have Mars here, these are obviously higher risk. They are a bit associated with UST, and obviously there's some fantastic fundamentals on some of these, and some might not be so great. So really think about what you want to be throwing your money at, and where you think that is likely to see significant gains. For us, we obviously lean on high utility, fantastic teams, fantastic technology, and all that kind of good stuff. But join us in Discord if you want to know a little bit more about it. So the point of this video, though, guys, is that we have seen a significant decrease with Luna. We all kind of get a good idea as to why this is going on at this point. Obviously, there were some loopholes or exploits, depending on which word you want to look at, when it comes to UST. And as a result of that, what you are going to find is that got exploited with Bitcoin. Bitcoin pulling down, drowning the market. Now, when it comes to BTC, we are seeing more outflows now than we are seeing inflows. So do understand that there is actually an accumulation that is going on. It's still ongoing. It has been ongoing since February, although we are starting to see a little bit more green in terms of net differences between exchange addresses. So essentially this is starting to bottom out. I do expect Bitcoin to pull back down further, though, towards $23,000. And in doing so, I would expect many of these altcoins to continue to bleed out. So dollar cost averaging, if that is your strategy, could be done. That I'm pretty much happy with dollar cost averaging pretty much most things right now. However, we should also be aware that if we're throwing big money, that we want to potentially wait for a bit of a reversal and get confirmation of an upward trend before we actually throw big money into the market. But if we're just a regular retail investor, dollar cost averaging is a fantastic way of doing it. And in the case of Luna here, I would not be surprised if we start to go down below 10 cent here, and maybe even lower than that. So the risks are with Luna. Will they be able to turn this around? Are they going to survive, and are they going forward, or is this going to zero? Let me know your thoughts and opinions in the comments down below. Guys, I'm going to leave the video there. If you have found this useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. With all that said, done and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.